So let's get started with this particular video, and let me start by setting up your footprint charts. So this is how you turn it on. On the very top you see the option here where you select different types of candle. You just select there, and if you just go a bit lower you will be able to see volume footprints. Now you also see options such as time, price, opportunity and session volume profile. Personally I use all three of them. If you guys are interested in learning about such advanced topics, just drop a comment and I'll be happy to record a video on that. But yeah, in this particular video we will be talking just about volume footprint, how does it work and how it can help you as well. So if you click on volume footprint, it might take a few seconds, and yeah, this is how the footprint charts usually looks like. Now currently I'm on a 30-minute time frame, but then you can be using this on any time frame that you want to use it. Personally, if you want to trade, if you want to use them for entry purpose, entering and exiting, you do not want to be on such bigger time frames, you can keep it anywhere around 5 minutes to 10 or 15 minutes max. But now let's start to understand what these numbers are. But before that, let me help you set up the whole chart. So if you just go on the top, on the right side top, you will be able to see the settings option. Just click on that and here you go, you have all the setting options. So by default it will be at auto, but yeah, usually I keep it at manual. I keep my ticks per row as 300, and then all this basic settings which you can see. I like to keep stag levels at 3. What are stag levels? Obviously I'll help you understand that as well. I keep the imbalances on at 300%. Usually that's my go-to number, but then you can also increase or decrease it. Now what imbalance is, what stag levels are, what other numbers that you see here, other names that you see here, how do they work and what they are, let's just get started with that. All right, so let me just break down how you are supposed to use a volume footprint, and then we'll go to the different parts of this video. So this is a running candle on a 30-minute time frame. What does it tells you? Now on a normal candlestick pattern, like if you just stick to a normal candle, this is just a big red candle and nothing other than that, like whatever color you guys like to use. But yeah, this is a big red candle and nothing else. But if you just click on the volume footprint, this is what you get to see. You get to see exactly what's happening inside that particular candle. Is this a manipulation move? Is this a continuation move? And if there is something else that might be happening, this is how you find it out. So now if you just look at this candle, there are red numbers on the left side and green numbers on the right side. Alright, so volume footprint, these candles are combination of two different points, bid and ask, or you can call it buy and sell. So on the left hand side, all the numbers that you see, they are all the sellers in the market. So let's say at 105.7, there were this many numbers of sellers and this many numbers of buyers. And then eventually as you keep going lower and lower and lower, the volume keeps on increasing because that is where the price is spending most of its time. Now usually you will see much bigger numbers when the volume is good in the market. Right now while I'm recording the video, there is not a lot of volume entering into the market, but yeah, it will still help us for the learning purposes. So on the left hand side, the numbers that you see are the sellers in the market. On the right hand sides, all the numbers that you see are the buyers in the market. Now you will be also able to see some small green lines and red lines. So these lines are actually imbalances. All right, so remember when we went to the setting and we set imbalance as 300%. So every time when there are more buyers than sellers by 300%, it will give you a green line. When there are 300% more sellers than the buyers, it will give you a red line. So that is how imbalances work. Now why do you use imbalance in your trading? So if I just go back to a normal candlestick chart and zoom out a little bit, most of you guys, I'm sure most of the traders, they like to use order flow and such kind of random shit in their trading. I mean, nothing against them, but yeah, I don't see any logic behind using them. So just for the sake of example, all right, I'm not saying this is an order block, but let's say just for the sake of example, you mark this as an order block and you just place it on your charts. Now what does an order block tell you? You are assuming that there might be a lot of pending orders around this block, and once the price starts to retrace, once you get a reversal, once you hit this box, the price will reverse because there are a lot of pending orders around here. But that is what you are assuming. There is no logic to back it up. I mean, yeah, you can say that price action and reversals and whatnot, but then yeah, there is no strong logic that can back it up. There is no data. You are just trading on the basis of assumptions. But when you just go to the volume footprint, let me go back to the volume footprint option, and yeah, when you go back here, you see all these red lines. This is where selling imbalance is. You see all the green lines, that is where the buying imbalance is. Now, rather than just assuming that okay, we have an order block here, so we might get a reversal, don't you think it's much better that you have a level marked something like this? Because there is a selling imbalance, literally 300% more sellers than buyer in this area. So while the price hits this level, the chances are extremely higher that you might get a reversal from there, rather than a level that you just assumed that there might be a lot of pending orders. All right, that is one of the ways how footprint actually helps you with spotting some reversal pointers as well with the imbalances. So now I've set my imbalance at 300%, but again, as I said, you can set it at any percent you want it to be. So similarly, that's for the red lines that you see, those are the selling imbalances. So in this area, there are 300% more sellers than buyers. And then at this particular level that you see, there are 300% more buyers than sellers. Now, let me give you a few examples of reversals right where there was an imbalance. So you see market has made its local low just around this area. I'll probably remove this for now. But yeah, market just made a low around this area. But if you look at the logic, there was actually a buying imbalance around here. Price went right into it. It hit that level. So now the order block guy just would have been waiting somewhere at the bottom, but then you were already prepared with this. It hits your level and you get that reversal that you were expecting, right? So that is why you want to be using data in your trading and not just assumptions. That is how footprint actually helps you. Now I was helping you understand what the numbers are on the left hand side and on the right hand side. But then you can also see some numbers at the bottom. You see total and then you see delta. What does total and delta mean? So it's pretty basic. It's pretty obvious what they mean, but I'll break it down for you. When you look at total, it says 3.92K. And when you look at the delta, it says minus 125. So now we won't get into the significance of bigger or smaller numbers, but now we'll just try to understand what these numbers are. So if you see the total is at 3.92K, that means in this particular 30-minute candle, this was the total volume, like combination of buying, selling, everything. This was the total volume that was 3.92K. But then if you look at the delta is the difference between buyers and sellers. All right. So if you see a number which is negative, that means there are a lot more sellers. But then if you see the number is positive, that means there are more buyers than sellers. All right. So now, how does this help you in your trading? Let me help you with another example. Let's say you had a support area here. No matter how you mark your levels, or for this sake of video, let's just assume you have a support level just around this area, and you see that price is just hitting it. But then there are literally only sellers at your support area and no buyers. So it makes no sense to get into a trade where there is no buyer entering at your level. So this is how this actually saves you from getting into some manipulation move, like price might just randomly give you a reversal, but you will think, okay, this is my support level, the price is reversing and I need to get into a long trade. But then eventually it will just dump because there are no buyers around this area. All right. So this is how it actually keeps you safe and helps you to not get into a manipulation move or into a trap trade. You guys must know a lot of traders, they like to call that, okay, yeah, a lot of traders are getting trapped. A lot of streamers use such kind of stuff, such kind of terms where they say, okay, a lot of traders are getting trapped and whatnot, but then they have no logic to back it up. But yeah, this is one of the ways how you can actually find out if the traders are getting trapped at your level or not. All right. So that is another of the benefits of using volume footprint. So it helps you with imbalances. It helps you with your entry trigger. It helps you with a lot of data around the market. Like if you see the numbers are not in millions, you know, you do not have to trade. All right. So that's a quick tip. If you see the volume, it's not in millions, do not enter into a trade. I usually like to use the BTC USD pair rather than USDT, but then it's your choice. You can be using whatever kind of chart you like to use. So now let me break it down to you, like one of these trades that I took earlier, what was the logic and how was I able to get into this trade where the SLs are so small and the targets are literally so big. Like risk to reward, you see, was insane, 1:30. Obviously I do early TPs, but that's not the point. Like you got into a great trade. So let me break it down for you guys. All right, so this is where I've entered. Now for now I'll just hide everything on the chart and just focus on the volume footprint. So you see, as soon as the price started to dump, there was all just negative delta, like majorly negative delta. it hits your level, and as soon as it hits your level, you see that okay, now the buyers have started to step in right at your support level, and it makes a lot of sense because you have planned the trade at a very key level. All right, so having really strong levels is the most important thing while you use footprint, because if you are just randomly marking levels, and again if you're just assuming that price has reversed literally twice earlier, so it might reverse again, in scenarios like that you might be ending up into dicey situations or into trades which might not play out well. But yeah, I would recommend using some really good levels, really strong levels. So one of those levels or one of those trading strategy is personally my trading strategy, where I built it just on trading data, and the levels, they actually make sense, so you can check that out. But then again, that's not the only strategy which will work out. Probably you can try something else, but yeah, if you are marking levels on the basis of assumptions, that is not going to work out. So right here what we see is that we had a lot of negative delta right when we were going to hit that support level of mine. As soon as we hit it, I get to see that okay, now the buyers have actually started to step in, and I usually like to see the numbers at 5-minute time frame and 15. But then just for the sake of example, this is what I am sharing with you guys. We went below, all the sellers got trapped, buyers started to step in, and the price just reversed. All right, so it was that easy for me to literally look at the market makers, what they were planning to do, and I just took the trade with them because they trapped all the sellers and the price just reversed. Now another fact about footprint is all the numbers that you see on your charts, they are basically market orders only. There is no footprint chart that will show you data of limit orders, right? And specifically if I just talk about TradingView only shows you the numbers of market orders and not limit orders, and hardly there is a software which will give you idea about the limit orders. All right, and that is absolutely fine. That is the fun part of using order flow, because you get to see where the retailers are getting trapped, and then you can just trade against them. This was an introduction to the volume footprint. I am sure it gave you some idea, it gave you some confidence why you should be using this in your day-to-day trading. I do use a lot of other advanced tools as well, which I just showed, and again I'll say they are advanced but not complicated. I usually like to say that as well. Understanding them is extremely easy if you have a right mentor, or if you have the right guy who can teach you about this. It hardly takes a month, probably 40-45 days to understand this whole footprint thing and all the other tools that I use. So if you guys have any questions, if you guys have any doubts, or if you guys want me to cover any such other topics, just let me know in the comments and I'll be happy to record a quick video on that as well. Alright, so I'll see you guys in the live stream which I do daily. Until then, bye.